Bharat Petroleum was the employer, I was the employee. As we went into induction, the HR session was the most important session for us because we wanted to understand, okay, CTC is so much, but how much will we get in hand? That was also relevant. When you join an article ship, we'll ask, right, how much is the stipend? Whether it is 1500, 500, 500, whatever it is, that stipend is valuable. Similarly, for the first job, the in-hand salary was also equally valuable for us. So we asked the HR, how much will be the in-hand salary? So like, you said CTC of a campus placement, and today you are saying in-hand salary. Why didn't you tell us at that point of time? You said you never asked us.
To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Friends, today we will start Ind AS 19 that deals with employee benefits. Now this standard you are getting introduced for the first time. The corresponding standard is Accounting Standard 15, which you did not have as a part of your syllabus at your CA inter level. We had at our times AS 15, and this was one another standard which was a headache. Like we had problems with AS 19, we also had lots of problem with Accounting Standard 15. Now again here, it deals with a simple concept called employee benefits, but again lots of complexities around it. And if you understand the underlying logics and concepts, again this standard will not be difficult. If you try to memorize this, if you try to just keep on learning and by hearting things here, it will be difficult because this also is a lengthy standard as Ind AS 116. So this is equally lengthy, this is equally complex, but if you understand the underlying logic and approach, then this standard will not be difficult for you, right? Now, what are employee benefits? See, there is an employer, there is an employee. What does the employee do? Employee provides some services to the employer, right? Now, in return, the employer will provide some benefit to the employee. A simple example could be, employee works for an organization, the organization pays salary. As simple as that. This is the salary which is paid by the employer to the employee is nothing but an employee benefit. Now again, you would say, simple, right? Salary account debit to cash or bank. I wish it was so simple, but there are lots of aspects to these employee benefits. If you can recall, what you learned in your income tax at your CA inter level, income under the head salaries, there were so many components as a part of salary. Not only basic salary, you had dearness allowance, you had house rent allowance, you had transport allowance, you have driver allowance, housekeeper allowance, you had gratuity, superannuation, so many components as a part of the salary. And that is where breaking down these components, understanding these components and how to account for them becomes very important. Okay, it's not just a monthly fixed payment which is made by the employer to the employee. There are many components which can form a part of this salary. So if I have to give you my own example, when I joined Bharat Petroleum, so Bharat Petroleum was the employer, I was the employee. Now there is an employer-employee relationship and I will provide some service on a monthly basis to the employer. Whatever the employer asks me to do, I have to do that. And the employer in turn would provide me some benefits in form of compensation, right? So if I have to run you through the compensation breakdown, when we joined when we attended the campus interviews and when offer letter was given, the CTC was close to 12 lakhs and it was, very exciting for us. Like, we're getting a CTC of 12 lakhs. Wow, it was such a wonderful moment at that point in time. Then as we went into induction, the HR session was the most important session for us because we wanted to understand, okay, CTC is so much, but how much will we get in hand? That was also relevant. So, and as we attended the induction session with the HR, then we got to know the various components which were a part of our CTC that was offered to us. So, if I have to just run you through those components, we had something called basic pay and the basic pay was 30,000. Okay. Then we had something called the dearness allowance. Dearness allowance, this generally is given by traditional manufacturing or PSUs. Okay, you will not see this much in a private company. Dearness allowance was 2/3 of the basic pay. So 30,000 was the basic pay, dearness allowance was 20,000. Okay. 30 plus 20 makes it 50. Then we had something called HRA, house rent allowance, right? Because we are posted in a metro city, the house rent allowance was 50% of basic pay. So 50% of basic pay came out to 15,000, right? That was our house rent allowance portion. Then apart from that, one of the component which the company included as a part of CTC was retirement benefits. The company said 50% of your basic plus DA, that is for a basic salary, that is 30 plus DA which is 20, 30% of that is your retirement benefit related portion, right? Now 30% of that comes to how much? 30% of 50,000 worked out to 15,000. Now what were included in that? It included a 12% of basic plus DA as a PF contribution. So you would have learned about PF, right? 12% of our basic plus DA, so which worked out to 6,000, that the employer would contribute to a provident fund. It was a recognized provident fund managed by the company itself. There was a trust inside the company, right? So 6,000 would be contributed to a PF fund. Then it also included a portion of gratuity in that. Now, what is that gratuity? You would have learned, right? For every completed year of service, let us say the company pays 15 days of salary. Okay, that portion is also included in your overall retirement benefits. Then the balance pertains to your superannuation benefits, that is pension and other benefits that the company would be paying. Okay, these were the three components which pertain to retirement benefits. Now, out of this, PF contribution was straightforward. 6,000 is what the company contributes, and that will be contributed or credited to our account when we resign, or after specified rules under the PF, we could withdraw that amount, right? So that was very clear. But the catch was gratuity will be paid after you complete 5 years of service. So they included it as a part of the CTC, because if an employee works for 5 years, the company has to pay. What if the employee leaves within 2 years? Then the company is not needed to pay. And for us, if we left the company in 2 years' time, gratuity was lost. We would not get any gratuity. It was told that it's part of your CTC, but it does not come to your hand. Then other superannuation benefits would be paid if you work in the company for 15 years. So if you don't work in the company for 15 years, even that is lost. So out of that 15,000, what was relevant immediately for us was only that 6,000, which we would get after every month credited to our PF account, right? That was given. Then we had other allowances, some around 8,000, then asset on hire 2,000, right? And some other benefits, something like you can book a holiday home in Goa, which is on the beach, and you just need to pay 1,000 rupees for that, right? Such kind of benefits were also provided, and they included that as a part of CTC. Okay. Apart from this, there was also a component called annual performance bonus. The maximum ceiling was 10,000 per month. So maximum ceiling was 1,20,000. 10,000 per month is what we were entitled to if you perform well. That was also a part of the CTC. You will get, whether you will get or not get would depend on your performance. And if you leave within 6 months, you will not even get that. Okay. Then another interesting component was something called paid leaves. The company said every month you are entitled to 3 paid leaves. Over and above your casual leaves, you are entitled to 3 paid leaves. Now, what is the meaning of these 3 paid leaves? If you want to take those leaves, you can take in the current month. If you don't want, we'll carry it forward to the next month and so on, or to the next year. And even after that, if you don't take, you can actually encash it. We said, wow. So if you want, you can take those leaves. Let us say I did not take a single leave in the first month. Those 3 days, actually I can encash. I can encash in the same month, I can encash in the next month, I can encash when I am leaving the company, but I can encash whenever I want. So there was this component called paid leave, and the value attributed to that was 5,000. That was also included as a part of CTC. What if I take the leaves? If I take the leaves, I will not get that encashment benefit. But then, how is it a benefit to the employee? See, it is a benefit to me because I am not working for 3 days, but still I am getting a full month salary, right? So that is an indirect way of compensating an employee. All this put together was a part of our CTC. Now, the key question that we had was, fine, this is our CTC, how much will we get in hand? See, that is very important, right? See, there is one component called CTC, cost to the company. What will we get in hand? And because it was our first job, how much will we get in hand was very, very important to us. Like when you join an articleship firm, you'll ask, right, how much is the stipend? Whether it is 1,500, 2,500, 3,500, whatever it is, that stipend is valuable. Similarly, for the first job, the in-hand salary was also equally valuable for us. So we asked the HR, how much will be the in-hand salary? So the HR said, okay, you will get the basic, you will get the DA, you will get the HRA, then you will get the other allowances, right? All this put together, 30,000 plus 20, 50, 50 plus another 15, 65 plus 8, 73,000 minus your contribution of PF 12%, 6,000 will deduct that, and will deduct tax of some around approximately 9,000, some professional tax would be deducted. So whatever you get in hand will be around 57,800, right? That will be the in-hand salary. We are like, you said CTC of 12 lakhs at campus placement, and today you are saying in-hand salary is only 57,800. Why didn't you tell us at that point of time? He said, you never asked us. So, very important for you also, whenever you get an offer letter in hand, please check what is the CTC and what is your in-hand salary. Because, there will be a lot of things which you will not get if you don't work with the company for 5 years or 15 years, right? So, for us, if you don't work for 5 years, gratuity is gone. If you don't work for 15 years, other retirement benefit is gone. If you don't buy an asset on hire, that 2,000 is also gone. Okay. leave you will get when you encash it. So, it became very difficult for us to reconcile the fact that CTC was so high and in-hand salary was so low. Okay. Now, the reason why I am giving you this example is not to tell you how to choose an employment or how to analyze the CTC. What I am trying to bring forward to you is, there is a component which the company paid me on a monthly basis. The basic, the DA, the HRA, the other allowances was paid to me on a monthly basis. For this, accounting is pretty simple, because every month the company pays me salary. I will say salary account debit to salaries payable, to tax payable or TDS payable, to PF payable, to PT payable. This is a monthly entry. Now, this PF payable, which is my contribution, employee's contribution, is something which the company has deducted from my salary, and the company will contribute to the PF authorities or the PF trust. There is another component which was setting with the retirement benefits of that 30%. Company will pay from its own pocket. So, what is happening here? From my pocket, I am contributing 6,000. From company's pocket, company is contributing another 6,000. Now, the important question is, how do you account for this? That is what we will be understanding in this standard, right? So, this is one aspect. The other important aspect is, I told you something about gratuity. Okay, when will the gratuity be paid? Gratuity will be paid if I work for 5 years. Let us say we are at year 1. I joined in at the beginning of year 1. So, year 1, year 2, year 3, year 4, year 5. If I work for these 5 years and then I let us say resign, I will get gratuity. Okay. Now, how will the gratuity be computed? Let us say 15 days of last drawn salary. Okay, 15 days of last drawn salary. At the end of 5 years, the company will pay me gratuity. Very simple. Now, the important question that you need to ask is, why am I getting gratuity? I am getting this gratuity because I have worked in the company for 5 years, which means the company has received 5 years of service from me, and because of that the company is paying me gratuity at the end of 5 years. Now, service has been provided over a period of 5 years. That means the relevant cost using the matching concept should also be accounted for in the 5 years. Correct? Because gratuity, let us say my last run salary, the basic plus DA at the end of 5 years is 1 lakh. On 1 lakh, I will get half month salary, 15 days by 30, will not do 15 by 26, 15 by 30. So, 50,000 is entitlement. 50,000 for 5 years becomes 2,50,000. At end of year 5, I am entitled to 2,50,000, but this 2,50,000 pertains to the 5 years of service that I provided to the company. So, what we need to do, this 2,50,000 of expense has to be appropriately accounted in each of these years. I am not saying 50, 50, 50, 50, 50 each year. That's not what I am saying. But this 2,50,000 which is paid at the end of 5 years has to be appropriately accounting. See, by the time you have seen this timeline, something would have struck your mind that there should be some discounting also, because in year 1 if I have to account for a portion of this 2,50,000, we have to calculate the present value. Yes, that is what we will be understanding in this standard. The other component that I told about is the paid leave. How to calculate for the paid leaves, how to provide expenses for those paid leaves, even those we will be understanding, because there may be a case that employee may not take leaves at all and he works for 30 years and then he encashes it at the end of his service. In that case, will you say that the leave expense will be accounted at the end of 30 years, or for every period when the leave had accrued, we should account in the relevant period? That is also what we need to understand as a part of this standard. Then the most important thing is, I gave you example of one employee. I said I work in Bharat Petroleum. There are 15,000 employees that work in the company. The company has to say how many employees will work, how many employees will serve the 5-year period, then they will be entitled for gratuity. And there may be cases where employees have not worked for 5 years. Some employees may work till retirement, some employees may resign in between, some employees may take leave, some may not take leave, right? All of these will impact the amount of retirement benefits that the company is paying. Simple thing like gratuity is dependent on future salary. What will be the salary for an employee who will work for 15 years in the company? That has to be estimated. Okay, let us say there is a case where an employee dies during the service in the organization. If benefits have to be paid there, then how do we estimate that? All of these things are dealt with in Ind AS 19. Now, one thing, we don't need to calculate all of these things. What will be the last drawn salary, how many years will an employee work, how many leaves will an employee take. We are not here to calculate those things for the company. That will be done by an independent professional called actuary. Okay, so there will be actuarial valuation, there will be a professional who will be estimating all of these things. What we are interested is, how do we account for these things? That is what is covered as a part of Ind AS 19. Now, apart from this, once when we joined the company, we got to know that there is an unwritten rule that after every 10 years of completed service, the company gives a gold coin. So let us say you complete 10 years of service, you get 10 grams of gold coin. Then let us say at your 20 years, when you complete 20 years, you get another 20 grams of gold. Then when you complete 30 years, then you get another 30 grams of gold. Now this was not documented anywhere as a part of the employer-employee contract, but this was something which was being followed in the company, and any employee who completed 10 years of service who used to get that, long service recognition called 10 grams of gold, then 20 grams of gold, then 30 grams of gold, and at the time of retirement, how many number of years you have completed, those many grams of gold would be given to the employee. Now, I think this scheme has been withdrawn because the government said that, you're not allowed to compensate over and above the CPSC guidelines, but still, such kind of routines were also followed in the organization, right? Now, I gave you a lot of background. What we will be understanding in this standard is, how do we account for each of these elements? See, something paid on a monthly basis, how do we account for that? Something what the organization is contributing to a fund, how do we account for that? Something what the organization has to pay like gratuity, how do we account for that? Something like this leave benefits, how do we account for that? If there are any other benefits, how do we account for that? That is what we will be understanding as a part of Ind AS 19. Okay, with this background, I think we are good to go into the standard and understand each of these aspects in details. Friends, one thing that you need to keep in mind is, unless you understand the underlying logic and this breakdown and the concept that I have explained it to you, it will be very difficult for you to relate to the standard with a practical life. See, it is not a simple salary account debit to salaries payable account entry. That is not what we are learning here. We are learning different components of benefits and how do we account for each of them. Now, having set a lot of context, let us understand what is the meaning of employee benefits as per Ind AS 19. So, employee benefits are all forms of consideration given by an entity in exchange for services rendered by employees or for the termination of employment. So, basically this entity is nothing but the employer, right? So, you have an entity, there is an employee. Now, the entity provides some consideration to this employee in exchange for services, that is services being rendered by the employee or for termination of employment. What is the meaning of termination of employment? Let us say the entity introduces a voluntary retirement scheme. They are terminating the employment of the employee before their actual retirement age, right? That could be one example of compensation paid for termination of employment. So, this is what is meant by employee benefits. Now, when we talk about employee benefits, for this standard, employee benefits may arise out of contractual arrangements between the employee and the entity. That is, there is an employment contract. As per the employment contract, if the employer has to pay some consideration to the employee, that forms part of employee benefits. So, like your, in your offer letter of employment, you would have basic pay, HRA, all of those things, gratuity, leave entitlement, other allowances, bonuses, whatever is arising out of contract is included in employee benefit. That is the most common part of employee benefit. The other thing which is included is something which the employer is required to do as per a legislature. For example, the entity is required to pay 12% of salary as provident fund contribution. Okay, this may be included in the employment contract. Even if it is not included in the employment contract, the employer is under an obligation to make this contribution, right? Now, here first the employer will contribute to, let us say, a fund, and ultimately the fund will pay that amount to the employee. So, this also forms part of employee benefit. Apart from this, the third category is the informal arrangements. I told you about the gold coin, right? That is not written anywhere. It is not written in the employment contract. It is not a part of any of the legislature also. It is more of an informal practice, something which the company is practicing for a long period of time, and that also forms part of employee benefit. The third category, that is the informal practice, is basically a constructive obligation. The first two are the legal obligations, right? If an employer does not pay salary, the employee can sue the employer in courts of law. Similarly, under legislature, if something has to be paid, something has to be contributed, that is also a legally enforceable obligation. The third one, the informal practice, is more of a constructive obligation. Now, such constructive obligation could be, the employer running a school where the employees' dependents can come and study, or they can, enroll in that school. All of those things can be a part of the informal practice. So, the employee benefits to which this standard applies includes those provided under first one, formal plans or other formal agreements between an entity and individual employees or a group of employees or their representatives. So, what does this include? Formal agreement between employer and employee, that is covered. Or there is already a formal plan in place. There is no contract, but there is a plan in place which is formally documented by the company, that is included. Or sometimes there are negotiations between the company and let us say the unions of the employees, and based on that they agree to create a plan, even that is included, right? All of these are the formal category which is either created by the company or there is some form of formal agreement. The second category is under legislative requirements or through industry arrangements whereby entities are required to contribute to some national, state, industry or other multi-employer plans. So, basically the example that I gave you, a provident fund contribution, right, that is covered under this category. And by the informal practices that give rise to the constructive obligation, that is the third category. So, all of these three categories are covered as employee benefits in Ind AS 19. An entity may also provide something like an employee stock option plan or something like a share based payment which are dependent on the shares or the equity instruments of the entity. Such items are covered by Ind AS 102 which deals with share based payments, right. So, if there is a share based payment, something like an ESOP, that is not covered under Ind AS 19, but that is covered under Ind AS 102. So, when we go to Ind AS 102, share based payments, ESOP accounting, all of those things will understand there, that is not covered under Ind AS 19. The other thing that you need to understand is Ind AS 19 is for the entity or the employer who is providing some consideration to the employee. Now, I told you that as with BPCL, we had a provident fund trust in house. So, there was the organization BPCL, we had a BPCL PF trust. Now, this standard is applicable to BPCL, this standard is not applicable to BPCL trust, meaning to say the reporting requirements, the recognition requirements, the disclosure requirements of this standard is made for the employer or the entity. It is not made for the plan. See, when I say plan, here I am talking about a PF plan. There is a provident fund trust, that provident fund trust manages the PF contribution. This standard does not apply to this particular provident fund trust. So, it applies to the entity but does not apply to or does not deal with the reporting of employee benefit plans. So, if the trust has to prepare its financials, report its financial statements, it has to do it separately, not as per Ind AS 19. Let us now understand types of employee benefits as per Ind AS 19. Ind AS 19 classifies employee benefits into 4 categories: short-term employee benefits, post-employment benefits, other long-term employee benefits and termination benefits. These are the 4 categories. First, let us understand what is the meaning of termination benefits. Organization would have something called a retirement date or a retirement age. It may be 60 years, in some private companies it may be 65 years, 62 years, right. So, what the company does is the company says once you attain the age of let us say 60 years, you will have to retire, right. After that, you cannot work in the company. So, your employer-employee relationship comes to an end on the date of your retirement. Now, what is this termination benefit? Sometimes the employer may terminate the employee's services or they may terminate the employment before the usual retirement date. Let us say the company came up with a voluntary retirement scheme. Okay, so technically if I was working in the company, I was supposed to retire in let us say 2040. In 2030 itself, that is 2030, they came up with a voluntary retirement scheme. That is to say, we are offering the employees choices. One choice is you can continue to work till 2040 or you can take some lump sum payment and retire from the company in 2030 itself, right. This is something called termination of employment, and if the entity is required to pay some form of benefit because of such employment termination, then those are called termination benefits. So, basically the employer may say that the employee has a choice, if you want you can retire, or if you don't want you can continue. That is one aspect. Or maybe because of downsizing and all, the employer simply says we are curtailing our operations, we are downsizing our operations, so you will have to leave the organization, and because we are asking you to leave suddenly, we are paying you let us say 6 months of compensation. Okay, these kind of things may happen. For example, if there is a takeover of the company by some other company and there is a lot of employee redundancy. Redundancy means there are excess employees and the organization actually wants to terminate the employment services of some of the employees. In such cases, if the entity has to pay some benefits, it has to provide some benefits, those are called termination benefits. Okay, so if you look at the definition, termination benefits are employee benefits provided in exchange for the termination of an employee's employment as a result of. So, what is this benefit provided for? Because there is a termination of employment. And when can that happen? First case, an entity's decision to terminate employee's employment before the normal retirement date. So, here it is not an option given to the employee. It is like we are downsizing, we are firing you, as simple as that, okay, and the employment is terminated. In return for that, if any benefit is paid, that is called termination benefit. Or an employee's decision to accept an offer of benefits in exchange for the termination of employment. This is something like a voluntary retirement scheme, okay. Now, when there is a voluntary retirement scheme, the entity makes an offer. We have this particular scheme. Employees who meet this criteria, they can accept this VRS or they can choose to work with the company. Now, someone who may be at, let us say 50 years of age and who has 10 years to retire, he'll do some calculation. I've already earned so much. I have so much of bank balance, PF balance in my account. I'll anyways get pension from the company. So, if I work for 10 years, I'll earn so much. If I leave now, I'll get a lump sum payment, and with that lump sum payment, maybe I can enjoy life, I can spend time with my family. So, some employees, they choose to accept this VRS, and some of them may think, I'll take VRS from this company and I'll start working in some other company, or I'll take up some consultancy job, right? Things like that. So, if that option is provided and the employee accepts a benefit in return for termination of employment, so that is what is about termination benefit. Now, coming to the other three plans, the first one we said is a short-term employee benefit plan. Now, what does this short-term employee benefit plan means? By the name itself, it is very clear. It is a form of benefit provided in the short term. Now, what is this short term? Say for example, employee provided services in year 1. If the benefit is payable within 12 months after end of year 1, that is called short-term employee benefit. For example, monthly salary. When is monthly salary paid? Maybe at the end of each month or at the beginning of the next month, okay. That is paid before 12 months from the end of the period in which the employee renders services. That is to say, employee, let us say, works in April month. Salary will be paid either on 30th April or on 1st of May, okay. It is paid within 12 months from the end of the period in which the service is being rendered. So, this is called a short-term employee benefit. Now, let me tell you, as far as short-term employee benefit is concerned, the accounting is very, very simple. Why? Because we know that some benefit has to be paid. It has to be paid within 12 months from the end of the period in which the employer renders the service. So, the accounting treatment would be as simple as the salary account debit or salary expense debit to salary payable, right? That is how you will account for it. No discounting, no need of actual valuation, nothing. Short-term employee benefits are pretty straightforward, right? Now, let us say a company also has something called a bonus plan, annual bonus plan, okay. Now, I have worked in the company for year 1, the company is happy with my performance and the company said, okay, we will pay you that 1,20,000 of bonus, okay. But when will that bonus be paid? Now, that bonus pertains to year 1, but that will not be paid in year 1. Generally, it is paid in the next year, that is year 2, and generally because the entity wants to take benefit in the income tax, and if you remember the provisions of section 43B, you would know that this bonus are generally paid before the due date of filing return, okay. In some cases, they may pay after also, but generally to get that income tax deduction benefit, they would pay within 6 months period. They can pay later also, there is no harm in that. So, year 1 bonus is paid, let us say, on 31st of August of year 2. When will we do the accounting for bonus? When will we recognize this bonus in the books? We will recognize that bonus in year 1. We will not recognize it in year 2 because it is a bonus pertaining to service rendered in year 1. So, that payable entry, salary expense, that is bonus, to bonus payable will be accounted for in year 1, and in year 2 that will be paid. Is this a short-term benefit? Yes, this is also a short-term benefit. Anything which is paid, any benefit which is paid within 12 months from the end of the period in which the services are rendered, then that is called a short-term employee benefit. So, when I say anything paid for services means it has to be in relation to that particular service which is rendered in year 1. Now, that was about short-term employee benefits. The next thing is post-employment benefit. What is this post-employment benefit? If you remember the breakup of CTC that I explained to you, there was something called as gratuity payment. When would the gratuity be paid? Gratuity would be paid only when the employment gets over, either retire or resign. Before that, gratuity will not be paid. So, let us say I worked in year 1, year 2, year 3, year 4, year 5, and after the 5th year I have resigned. Then that gratuity is payable, okay. So, the gratuity which is paid post the employment. It is not paid during the employment. Whereas, if you look at the short-term benefits, they are paid during the employment as well, right? But post-employment benefit are paid only after the termination of employment or only after the completion of employment. Either you resign or retire, you are fired, whatever it is, only after that point you will be made those payments. Those are called post-employment benefits. For something, like pension, post-retirement which is paid, right? That is also a post-employment benefit. In some cases, companies also provide post-retirement, some facilities like medical facilities, some, healthcare facilities, education facilities for children and all of that thing. Those are also post-employment benefits. Then apart from this, we have something called as other long-term benefits. Now, what are these other long-term benefits? These are those benefits which are neither short-term, they are not post-employment benefit, they are also not termination benefit. That residual category is the other long-term benefits. What could this example be? Something like the gold coin example that I gave you, right? That is not a short-term benefit definitely, because it is not payable within 12 months of the completion of service. You have to complete 10 years of service, right? Then it is not a post-employment benefit also, because it is paid during the employment. So that gold coin can be classified as a other long-term employee benefit, right? So having understood this, let us look at the definitions of each one of them. Short-term employee benefits are employee benefits other than termination benefit. So if it is a termination benefit, you will categorize that as termination benefit. So you will not classify them as short-term benefit. Short-term employee benefits are employee benefits that are expected to be settled wholly, means fully, not even partly, wholly before 12 months after the end of the annual reporting period in which the employees render the related service, right? As I told you, your normal salary, your, the dearness allowance, your HRA, all of those things are paid within 12 months from end of the annual reporting period is called a short-term employee benefit. Then, post-employee benefits are employee benefits other than termination benefit and short-term employee benefits. So, if it is a short-term employee benefit, you will not classify that as a post-employment benefit, okay? And if it is a termination benefit, that also will not call it as a post-employment benefit, that are payable after the completion of employment. So, whatever is payable after the completion of employment, then that is called post-employment benefit. Then, other long-term benefits are all employee benefits other than short-term employee benefits, post-employment benefits and termination benefits. That's the residual category, and we have already seen the definition of termination benefits, right? So, these are the 4 categories of employee benefits as per Ind AS 19. Now, if you look at short-term employee benefits, as I told you, accounting is pretty simple. Why? Because the period in which the services are rendered, the expense for that will be booked in that period and corresponding liability would be booked. When it comes to termination benefit, there also accounting is simple, because once you have decided to terminate the employment, then there is a liability which arises that will be also accounted in the period in which the termination occurs. That is also pretty simple. The challenge would be to account for post-employment benefit and other long-term employee benefits. That is what is covered in the large part of this particular standard, right? That is where you have to pay extra attention and focus in understanding. Now, as a part of this standard, under each of the categories, we will understand how to recognize, measure and present. That is to say, you will understand the recognition, measurement and presentation aspects related to short-term benefits, post-employment benefits, other long-term employee benefits and termination benefits, right? The short-term one is most straightforward one, where you just need to, book an expense and create a liability. That is the simplest one. A lot of effort will have to be put in to understand the post-employment benefits and other long-term benefits. Termination benefits, as I told you again, is a simpler one to understand, right? So first, let us understand how do we recognize, measure and present short-term employee benefits. Now here, we'll understand generally what would be the treatment for short-term employee benefits. Then we'll understand specific aspects related to paid absences, that is the paid leave related part, and the profit sharing plan or bonus related part. Okay, these two will need some more in-depth understanding, and we'll also understand what is the general recognition, measurement and presentation criteria.